Welcome to Alpha Recap, the daily market wrap from stockalpha.ai. We just finished the trading day and there was plenty to unpack. And as always, if you have questions, you can reach us at stockalpha.ai.
Good to be here. Markets closed with a clear risk-off tone. The S&P finished down about 1.25%, the tech-heavy Nasdaq closed down roughly 1.5%, and small caps lagged hardest, with the Russell down about 1.8%.
That trio really set the mood for the session. It felt like the market took a step back after a long run higher. Big cap tech names gave back gains, crypto volatility rippled through equities, and money moved into defensive and commodity-linked areas.
Absolutely. Today wasn't indiscriminate selling, but it was broad. Growth and momentum names got hit hardest, while utilities, materials, and some real estate names showed relative strength as investors sought shelter and inflation protection.
Let's break that down. Tech and communications were the clear weak spots. Meta underperformed after what the street called a missed opportunity, and cloud skepticism, especially around Amazon's cloud sales, weighed on the group.
Right. When a couple of the mega names that have been carrying indexes stumble, it amplifies pressure across the whole growth complex. Add in a sharp move lower in crypto, and you get a nasty cocktail for fintechs and merchant-exposed stocks.
On that crypto point, the sell-off there didn't happen in isolation. It triggered liquidations and hurt names tied to digital assets. That cross-asset spillover turned what might have been a sector wobble into a broader risk-off move.
And that's where we saw rotation. Investors were trimming higher beta positions and reallocating into utilities for dividend stability, materials and miners for inflation protection, and select REITs with steady cash flows. It was very much a hedging posture.
Let's talk about small caps for a second. The Russell's drop was steeper. That's classic in a de-risking environment. Lower liquidity, thinner bid depth, and stop-loss chains in small names can magnify moves when headlines go the wrong way.
Exactly. Quant funds and stop-loss algorithms can accelerate selling on the downside in those names. That technical selling often looks worse than the fundamental story, which tends to drive short-term headline volatility.
On the sector specifics, utilities held up well as a safe haven, materials and miners caught a bid as commodity-linked plays, and some multifamily and mortgage-related REITs attracted buyers because they're seen as income anchors in volatile times.
Energy was mixed. Exploration and production names saw some profit-taking, but midstream and dividend-focused energy stocks held up better. Consumer and retail were mixed as well. Pockets of strength persisted where tech investments are improving online execution, but that couldn't overcome the tech drag.
A few individual names drew headlines today. Amazon was in focus for its cloud moves and its attempt to make AI infrastructure cheaper. Investors liked the long-term idea, but there was skepticism about near-term revenue traction.
Meta was a clear headline loser after people framed its recent performance as a missed golden opportunity. That hurt the communications group and fed into the Nasdaq slide. And crypto-exposed companies like Coinbase felt the pain as the digital asset route fed into equity volatility.
We also had some routine corporate filings that drew attention. WEC Energy filed an 810K, and that came alongside the general interest in utilities as a defensive spot. AllianceBernstein and a handful of smaller caps had filings that added name-specific swings, but they weren't the story behind the market-wide move.
On the macro front, there wasn't a single big Fed bombshell today, but the Fed narrative was in the background. When growth and risk assets wobble, market-implied timing for rate cuts often drifts later, which is a headache for rate-sensitive growth stocks.
And firms like BMO putting out a year-end 2026 S&P target of 7,380 remind investors that strategic, bullish views exist, but they don't stop short-term volatility driven by headlines and market structure.
Speaking of market structure, breadth deteriorated today. Decliners outpaced advancers, and that's the technical signature of a short-term pullback. Traders will be watching support zones and moving averages to see if this is just consolidation or the start of something deeper.
From a practical perspective for listeners, if you're a trader, watch earnings flow and company commentary out of cloud and tech names, because that will influence flows. If you're an investor, ask whether today's move changes your thesis or just gives you a tactical entry point.
Looking ahead, the big things to watch are crypto stability, incoming macro prints that could shift Fed expectations, and whether the rotation into utilities, materials, and REITs has legs. Also, keep an eye on market internals. Put call ratios and ETF flows will tell you if institutional buyers step up.
Let's boil it down to quick takeaways. 1. The market closed weaker with big cap tech, the Nasdaq and small caps leading the declines. 2. The sell-off was driven by a mix of crypto spillover, profit-taking, and cloud execution worries. And 3, investors rotated into defensive and commodity-linked names as a hedge.
And one more, breadth and technicals matter right now. If support levels hold and buyers step in, this could be a healthy pause. If selling broadens, we could be looking at more downside. Keep your time horizons and risk tolerance front and center.
That's our recap for today. If you want the charts or the specific support levels we mentioned, log into stockalpha.ai for the full note and visual breakdown.
If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back tomorrow with another post-market summary. Good night.